There's some big changes happening to mortgage fees, and I'm here to break it all down for you. Welcome back to the channel. This is Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. Now look, I'm not going to go into the like, comment, share, subscribe, but I just said it anyway, so you might as well put it on the screen too. All right? Hit the bell for notifications. I wasn't even going to go to that. I was going to go straight to the information because I know you guys came here to get some information. I got my two partners in crime with me today. I got Jordana with me here on my left. How are you, Jordana?
I'm good. Live and blessed.
You haven't been in studio in a while.
Okay, calm down. Calm down. Relax. It's been like a couple of days.
Nice for you to come to the office, right? And y'all know this guy. He's famous now. He's doing podcasts. Y'all taking pictures with the guy.
Stop.
Tukes Productions is also in the building. Okay. Now, House Economics, you already know the vibes. Go to the bookstore, all that good stuff. mgbookstore.com. If you want to work with me and my team, we want to work with you. Apply with mg.com. And that's it. That's my opening. Right?
Love it.
Cool.
So let's get to the point. Let's talk about the big changes that are happening to mortgage fees. This is going to be huge, guys.
I'm really excited about this.
You excited about the fees?
Because I want you to break it down.
Oh, this means it's going to get expensive.
Well, I want you to break it down. Exactly.
You're excited for people to pay more money?
I want you to break it down to me because I don't understand this at all.
Okay. So we're going to break this all down. Get a pen and paper. Now, throw some gems in the comment. Throw some fire in the comment. Throw something in the comments so we know that you guys are here. How does the mic sound? How's the quality? Let us know. Put it in the comments. Let us know. All right. So let's get to the point. Now, if you follow me, I always teach you guys how to search for information. I'm not stingy with the information. I tell you where to go. Now, one of my favorite websites is Mortgage News Daily. And this is an article that came out, as you can see on a date, on January 19th. Now, what I noticed is that I don't see any loan officers on the internet speaking about this. I haven't seen any YouTube videos. I haven't seen anything. And I've been kind of busy for the past 4 or 5 days. And I was at Kiana Watson's, shout out to Kiana, our co-host of Rants and Gems. And I was at her Agent Tools for Success Mastermind weekend. Mm-hmm. And I was speaking to the folks about this. And this was a room of all realtors. And none of them had no clue about this. And I said, wow.
That's crazy.
I got to go on YouTube Monday live and discuss this and have you guys here with me because I know you guys will have a lot of questions as well about this. So let's get into this information. Tukes, is there any way you can put this link in the live chat right now? Like copy and paste it so that way.
I can copy it. I just want to turn this the comment sound off.
Okay.
So, it's annoying you?
It's picking up on the mics.
Okay, yeah. Let's turn that. Let's turn that.
Thank you for the gems, though, guys. Keep doing it.
Yeah. We love the gems. Keep the gems going.
But Tukes is a perfectionist.
Yeah, Tukes don't like it. All right, so let's get to the article. Some big changes to mortgage costs were just announced. In a single moment, the fees for a vast majority of new mortgages in the U.S. have changed. In some cases, the changes are drastic, both for better and for worse. Let's break it down. Mm-hmm. So what do you mean by fees and costs? All right, this refers to loan level pricing adjustments, LLPAs. Now, you guys can kind of read this part. I'm just going to break down what LLPAs in my words instead of what the article is saying, right? Mm-hmm. This is basically fees that Fannie Mae and Freddie Mac charges lenders to do loans, right? Based off of numerous different things, right? It could be credit score. It could be loan to value. It can be, those couple things. If it's a purchase, it's a refinance. If it's an investment property.
Got it.
If it's a primary residence. If it's a multifamily. There's different pricing adjustments.
So newbie investor here. So the lender will then pass those fees on
to the consumer, right?
Okay.
So, and this article is really good. That's why I said let's show them the article because it breaks down a chart. It kind of shows you like a matrix, right? Mm-hmm. So these LLPAs, guys, is what the lenders, what the Fannie Mae and Freddie Mac are passing off to the lenders, and is built into your interest rate. Mm-hmm. So if you have, let's just say, for example, a 680 credit score, you're buying a 3-family primary residence, and you're borrowing 80% financing, on the back end fees, that might be 3.5%, 4% on the back end. So that will in turn transition to what interest rate that the lender is going to offer you. Now remember, that's just what Fannie Mae and Freddie Mac is going to make. Now the lender has to make their money on top of that as well. So if the lender needs to make 3-4% on top of that, it might be built in 8 points into that interest rate, right? So because the lenders are not going to
Just do it for nothing.
no, we're not for profit because if you don't understand, see, most people when you shop in loans, they think, oh, this bank can get you lower, this, that, and third. But people don't really understand these LLPAs are really what's setting the price off. You know what I'm saying? From the jump street, comparing like your whole profile to somebody else's profile. That's why when people say, yo, my friend went to this bank and they got this, well, your profile is different.
Yeah, everybody's different. I think people should know that now, right?
It's completely different. So that's kind of what LLPAs are. Is basically the fees that Fannie Mae and Freddie Mac are charging the lenders for that particular borrower for their loan scenario, right? And it's a whole matrix and everything like that too, right?
Okay.
So, and again, you guys can go read this article yourself and kind of read this, but I just want to read some couple key points, right? So it says, what lenders and loans does this apply to, right? So any loan guaranteed by one of the agencies, regardless of the lender. This is most of the loans in the U.S. Example of the loans that wouldn't be affected would be FHA and VA, as well as some jumbo loans and specialty products like non-QM loans, right?
Okay.
Are not impacted by these changes. These loans are not guaranteed by Fannie Mae and Freddie Mac. So basically, making a long story short, any conventional mortgages
It's going to be impacted.
is going to be impacted. Not FHA, not VA, not non-QM loans, not portfolio investment type of loans. These loans are not impacted by these changes that the government, the FHFA, is making. Only for loans that are Fannie Mae or Freddie Mac. Doesn't matter if you're doing a purchase, refinance, cash out refinance, buying investment property, second home or investment property. If it goes to Fannie and Freddie, these changes are going to impact you.
Now, do we know what kind of kicked off these changes, or is it just woke up?
We'll talk about that.
Okay, because I want to know.
Save that question, right? So, when does this take effect? This applies to loans that are guaranteed by the agency starting May 1st, 2023. That means many lenders will begin to implement the changes in March and April. What has changed in a nutshell? The effective penalty for having a credit score under 680 is now smaller than what it was. It still costs more to have a lower credit score. For instance, if you have a score of 659 and are borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance, whereas you paid no fee if you have had a credit score of 780 plus. But before these changes, you would have to pay a whopping 2.75% fee. So think about this, right? And it says on a hypothetical $300,000 loan, the difference is about $37.50 in closing costs, right? So what they're basically saying, to break this down for you guys, how it is right now, if you had that 659 credit score, you're paying 2.75 on the back end for the scenario that they broke down. 659 credit score, obviously this is a single family, they're referencing, and you're putting down 25%, right? Now, it got cheaper for the person who had that 659 credit score starting probably May, April. So someone with a lower credit score, it actually got a little bit cheaper by 1.25%. 1.25% on the back end, right?
Right.
On the back end. Now, everywhere else in the spectrum, things get worse. Borrowers with a higher credit score will generally be paying a bit more than they were under the previous structure. The following chart shows the differences. Green and yellow cells show where things have become more affordable than what they were. Orange and red cells are more expensive. All values refer to a percentage on the loan balance charged as an upfront fee. This doesn't necessarily come out of your pocket upfront, as lenders can offer a higher interest rate in some cases to pay these costs for you. But the costs are still there and still technically being paid by you over the life of the loan in the form of interest.
Okay.
All right? So now, you see the chart? Tooks, move the chart up some so they can see it, right? So this chart right here, again, it said in the article where it's orange and red, it gets more expensive. So what you guys are looking at, right, is basically like a matrix, right? This is what
That's what it feels like. Yes.
no, but this is on my end. This is a LLPA matrix.
Okay.
Right? So you see on the left hand side it has credit scores lower than 639, then it has 640 to 659, 660 to 679. So that's the credit score buckets. One of the most important changes they made prior to this change that's happening May 1st, 740 was the highest tier bucket. So any credit score above 740 was treated the same. Now you see they added 2 more levels, right? 740 to 759 and 760 to 3 more buckets.
Yeah.
They added the 740 to 759, 760 to 779, and then 780 and higher,
Yeah.
right? So they added a couple more tiers, whereas now the structure is 740 plus, everything is treated the same up until 850. Now they're making it, well, you're not A1. 740 and plus in my world is A paper credit, right? Because you don't have no LLP, you have less LLPAs. Now in this new structure, now on the top row where you see 30%, 30 to 60%, 60 to 70%, y'all see that?
Yeah. Break that down.
Right? That's your loan to value bucket,
Okay.
right?
Okay.
So I'm teaching y'all how to read a matrix
I'm learning.
too at
I'm
the
learning.
same time.
Right. I'm learning.
This is how us loan officers, this is what we look at, right? Well, everything's technology now, so you just punch it in the computer and it spits out something. But old school folks like me, I like to look at the matrices to make sure I do the numbers manually to make sure that the pricing that I'm seeing is accurate, because sometimes computers make mistakes. But I'm giving y'all some real lesson right here. So on the top, that's your LTV bucket. So when you have a credit score, so let's just say you go to a 720 to 739 credit.
Okay.
And let's just say you're putting down, let's just say you're putting down 15 to 10%. So if you go 720 to 739, and now you're at 85 to 90 LTV, you see it's 0.5%, right? You see it's negative now. It's more expensive now.
Okay.
You see what I'm saying?
Yeah.
But now you see if you borrowing more money, you see if you do a 95% LTV.
It goes up.
No, it's going lower.
No, I mean to 0.25, right?
Exactly.
Got it. Okay.
Because
Okay.
remember, orange and red cells mean more expensive.
Got it. Okay.
Green means cheaper, right? So you see you getting penalized if you're putting more money down, even with a higher credit score.
That makes no sense.
It's stupid as shit.
Okay.
You should be rewarded because you're putting more money down,
Right.
essentially.
Right.
But in this format right here, it's going to cost you more because you're putting more money down. So it's actually probably more advantageous for you for it not to.
It's like if you have the money, just hold on to it.
Yeah. So that's just basically like an LTV metrics. I just wanted to give you that quick example. Now there's some other changes that aren't so easily translated in this heat map. The most notable is a new charge for your debt to income ratio, which, ladies and gentlemen, your debt to income ratio meant nothing towards your pricing before and did nothing to your interest rate. So if you had a high debt to income ratio, a low debt to income ratio, you wasn't penalized. As long as you qualified into the debt to income ratio parameters, you were all good.
And you could get the loan. But
Cool, you qualify.
Right,
You meet
right.
the DTI. Now they're penalizing you if you at a certain debt to income ratio. Now you get a penalty. So it says it in here. There's a new charge for DTI. This will be controversial in many scenarios, as income calculations can be somewhat subjective and debt calculations can be legitimately tweaked with some advanced planning or debt consolidation. Nonetheless, every loan guaranteed by the agency has a DTI attached to it. So if yours is over 40% and you're borrowing more than 60% of your home value, you'll be paying more, right? So if you have, most borrowers are not putting 40% down, right?
Those facts.
They're putting 5 to probably 20% down. And let's just say if your debt to income ratio is 43%, you might get a 1/4% hit on the back end of your pricing, which can translate to probably 1/8 of a point higher, a half a point hit can probably be a 1/4% higher in interest rate. You know what I'm saying? So now you're DTI. So now it's going to be even more important for folks
To lower their debt.
to lower their DTI. So now if you're running it up and you got all types of personal credit cards, car loans, and all this other shit, and now you got a 45%, 47% backing, it could get more expensive for you for interest rate because now they're looking at you as more of a risk.
Yeah.
So now they're hitting you with this risk-based pricing.
I have a stupid question.
There's nothing stupid
Nothing
right
stupid.
now.
You're right. Nothing stupid. You know what this reminds me of? It reminds me of like PMI for FHA loans in a sense, right? Like, you know, when you're kind of risky, they charge you because it's like, how do they know they could actually trust you?
Well, it's PMI in general then.
Right. In a
Because if
sense.
you put down less than 20% on conventional, you still have PMI.
So now, yeah, exactly. So you have PMI and you're getting charged for this like whole DTI,
Yeah,
which is crazy.
Well,
I mean, I understand.
But you're getting charged for everything now.
Right.
Right? So even if you're having a 740 credit score, you're paying a little bit more expensive fee. If you have a 760 credit score, you're paying a little bit more expensive fee. If you have lower credit scores, you're paying a little bit more expensive fee.
Well,
right?
why can't you get rewarded for doing the right thing and having a better credit score? No, like that.
You would think that, but in this world where there's risk to, no matter what, you have a looming recession, people will get laid off, people stop paying their credit, their mortgage, right? It's just normal. So what they're doing is basically trying to continue to run it up because there was record-breaking years over the past couple years in our industry because of home prices. So you got to think of the billions and billions of dollars that was made. Now that volume's going down, that means less money. So how do we make our money back off the volume that's coming? Fees. And lenders, what do you think they're going to do? You think they're going to eat the fees? No. They're going to pass it off to the consumer, right? So look, there are a few other examples of changes. There are new credit score bands of 760 plus and 780 plus, which I just explained. There's a more differentiation between high balance versus non-high balance ARMs, but we don't have to worry about that because most of y'all are probably not doing ARMs. There's several changes to 2 to 4 unit properties on the LLPAs, which this article doesn't really break that down, but I got to read through all of that to kind of break that down on a different video. There's a new generic LLPA for subordinate financing, a second loan on HELOC, whereas the previous LLPAs were more granular depending on the LTV of first loans versus subordinate loans. And there's a big increase in fees for many cash out refinance loans. So there's a lot happening with here, right? There's a lot happening with this, an awful lot happening with this. And I'm going to go on my phone right now because I think I sent you guys the article too, right?
Yeah.
I'm a text in the live chat right now the article so that way you guys can.
I posted it in there already.
You did?
Yeah.
Perfect.
Oh, well, do it again then. Make sure you guys, we got 200 plus people watching this right now. Make sure you like, comment, share. Make sure you drop a gem. But let's, and Tooks just posted this into the comments as well. But I just want to be clear with, I want to make sure, first of all, you guys understand what the hell I just said. You can take this off the screen.
Yeah, honestly, dude.
Honestly,
you have no clue?
These overlays, come on, man.
What's up the Tooks production right here? He got all types of overlays going.
The Matrix got him stressed. The Matrix got him stressed.
Yeah. So I just need an example. If you give me an example, I'll.
All right. So let me break this down for you and everybody in this room today, and everybody who's watching this live with us and who's going to watch this on a replay. It just got more expensive for you.
I get
Period.
that.
Point blank.
I get that.
Right?
I get that part.
So what it's basically saying, if you have somewhat lower credit scores in certain scenarios, so in that example, they gave a lower credit score with putting 25% down. They said 659 credit score, single family, purchase, but putting 25% down payment. Your fees on the back end today will be 2.75% on the back end. And now with the new structure, it'll be 1.5%.
When you say
on the back end, pause. So
when you say that, no, seriously, what does that mean?
So that means, good question. This basically means, let's just say if the interest rate today for that particular scenario, with a 659 credit score, with 2.75% in LLPAs, that would probably be, let's just call it a 7% interest rate, just for this conversation purposes. Being the fact that the LLPAs in that particular scenario was now lower by 1.25%, that might translate into a 6.625% interest rate because there's less LLPAs in there. Now, again, depends on the lender and what their margins need to be on a deal as well, right? So if a lender needs to make 3 points on that deal, they might still be at 7%, right? With the new structure, and with the old structure, the way it is, they might be at 7.5%,
Okay.
right? Because they need to make money too. I'm talking base rates before the lenders got to put their margins into these deals, okay? But basically, this can translate, depending on lender, depending on your scenario, 3/8 of a point to probably a point higher in interest rate, depending on the borrower's overall profile and interest rate that they're going to pay over the life of the loan. So it just really depends on, because there's so many moving parts. I wish I had the computer so I can go on here and just kind of like, and I can kind of show you things, but I can't even sit here and try to tell you what websites it is. I just know them. You know what I'm saying?
Yeah. No, I just think that
It just basically, long story short, the clock is ticking on you. Don't wait to buy real estate. Buy real estate and wait. This is why I keep preaching y'all, because shit can change at any stroke of a pen.
okay, so I'm going to get a house. Let's say I'm looking for a house next week. Am I going to be affected by this?
So here's the thing, and this is what the article said, and I need everybody to understand this. When guidelines change like this, especially to costs and fees, lenders start to implement them sooner than the target date.
Okay.
Fannie Mae and
Really?
Freddie
Okay.
Mac is saying May 1st that these,
Right.
regardless of what, these changes have to be implemented by May 1st. Lenders will start putting this in play March, April, because you don't want to wait till the last minute. Because now, if you have all these new applications come on April 25th, and now you got to update your entire pricing system and everything like that. So the smart lenders, now what they're going to do is the loan officers are speaking to their clients. They're creating the urgency. Look, you need to get into something right now if you're trying to do something and lock in, because the shit is going to hit the fan. And if you are one of those people who have maybe low credit scores, low down payments, you're going to be impacted if you're trying to go conventional. Even if you have a 730, 740 credit score with a lower down payment, you're going to be impacted. If you're buying a multifamily, you're going to be impacted. If you're trying to do a cash out refinance, you're going to be impacted in a negative way. The only way this is going to not impact people, no matter what your really credit score, based off of what I've read so far in this, is if you're putting down larger down payments.
What if you're doing an FHA?
FHA has
isn't.
nothing to do with this.
Okay.
This is
cool.
only for loans that are Fannie Mae, Freddie Mac backed, conventional mortgages, not
Okay.
FHA, not VA, not USDA, not non-conforming, no bank statement loans, no portfolio loans, only Fannie and Freddie loans and all the programs that fall under their wing. So,
Okay.
if you want to avoid this, you have to kind of lock into a deal, get into contract, lock into a deal with a lender ASAP.
Like right now.
I would probably say you got 30 to 45 days. Realistically, sometime in March, you're going to start seeing lenders start to implement this. Definitely by April 1st, you will see, because lenders are not going to wait till May 1st.
So we agree this is kind of wild.
No, it's not. This happens every day, B. It's kind of wild because y'all not used to this, and there's no
Yeah.
one on the line that's talking like I'm talking like this, especially in our community, that's giving y'all these updates as things change. I've been doing this pretty much for 4 years now. So it sounds kind of wild, but in my world, it's like this happens every day. This is why probably no one's talking about it, because another day.
I mean, doesn't this affect, everybody, not only the buyer, but like the realtors, the loan officers? Isn't it going to be kind of harder for deals to get closed all
No.
across the board?
People going to buy real estate every day, no matter what happens. Rates tripled up this year.
That's true.
People still buy
I guess if
homes.
you got it, if you're really serious, you're going to do what you got to do.
You're going to
anyway.
do what you got to do,
Right.
Because you as a consumer, if I never said this, would you even know what an LLPA was?
Absolutely not.
Exactly. Have you even heard of an LLPA before?
Tooks, do you know what it is right now? I still don't know what it is right
Yeah,
now.
no, I still don't even know. But all I'm trying to figure out is, for me, if I'm going to buy a house, do I need to have extra money based on my credit situation? You know what I'm saying? Like,
But you got
how
to
is it gonna
understand,
affect
this
me?
can affect you in many ways. I've been predicting that interest rates will drop
Right.
this year, and they've been falling. They're still in the low sixes. Let's just say by April 1st, the national average rate is 5%, for example.
Okay.
that don't mean shit with these new changes that's going to come because
still gonna bump it
you're
up.
still going to be
Yeah,
bumped
okay.
up to probably a high five now after it's all said and done.
Because of the
Because
fees.
of these new fees that
Okay.
that Fannie Mae and Freddie Mac are now imposing for certain credit. Like you could have a 740 credit score right now and be considered an A1 top tier borrower. But
Right.
now with these new changes, think about it. They put 2-3 more buckets on top of it.
Yeah.
So now your 740 don't mean shit. You're third tier now. Whereas now you were number one tier for
Right.
one bucket. Now remember, when we showed the matrix, it's not just your credit score because people always say, "Oh, I got a credit score of 8,000." Who cares?
Tell me
What type of property you buying? How much you putting down? And now, what's your debt to income ratio? So really think about that now.
Yeah.
Right now, we're looking at LTV, property type, credit score, as far as those pricing buckets for your LLPAs. Now they added DTI into that.
Right.
And now they added other layers on top of your 740 credit score. So even if you got a 760 credit score, you might not get what the bottom barrel rate is. Because if you got a 760 and putting 5% down, you're not going to get the same rate as someone with a 760 who's putting 25% down.
Right.
You see what I'm saying?
Right. With less DTI too.
With a lower DTI. So if you're the person who have a 760 with a 45% debt to income ratio and putting 5% down, come May 1st, which I believe probably April 1st, you're going to get a higher rate than the same borrower with a lower DTI and a larger down payment. They're going to be rewarded. So the people who have the larger down payment, 25% or more, the lower DTIs, the higher credit scores, those are the less riskier borrowers. Those are the people who are less likely to
They're more
default.
attractive, yeah.
They're more attractive. And the people, even if you have a high credit score, if you're putting low money down, you're less attractive.
Got it.
You're more of a risk.
Okay.
So these fees and costs, again, you as the consumer, Tukes, Jordana, myself, our audience, I'm going to see it because I understand pricing and I'm looking at pricing, right? But you guys would never understand what a pricing, what a rate sheet looks like. You
Right.
don't see a rate sheet.
I never saw this before.
Yeah, but this is not even a rate sheet. This
Oh,
gets
okay.
a little bit
This-
more complicated. Maybe
Yeah.
one day I'll show a rate sheet. But
Okay. We heard it here.
and I'll really break it down.
We heard it. He's going to do it this week probably.
Maybe.
Maybe.
But this
We'll nudge.
this doesn't impact VA loans. For those of you who just came into the classroom, this is Professor MG speaking. We are talking about loan level pricing adjustments. Okay. If you just walked in class, please be quiet. Okay? Please turn your cell phones off. The class is already deep into the lesson
okay,
right now. Okay. Yeah, that's my new thing. This is a
Okay.
classroom now.
Okay.
Okay. So I say all this to say it will get more expensive in terms of upfront fees. Because now, think about this. If a lender is not trying to, let's just say you want a loan with no points, right? And now you have all these LLPAs on top of the lender's margin. That rate might come, if you want a 6.5% rate, right? For example, you might have to pay 3 points now if you don't want the lender to make it all on the back end.
And can you buy that down or is that a
That is the buy down. Because now you're saying, I don't want the 7.5, I want the 6.5. Well, it's going to cost you 3 points. The 7.5 ain't going to cost you nothing. Or the 7 might cost you 1.5.
Man, this is
It gets cool. This
this is getting spooky hours.
This
This is getting real.
I know this, and this is, I was kind of leery on speaking on this in a general public format like this, but I feel like it's important for me to have these type of conversations because, and Tukes just put the article in the link. You can go read the article for yourself, right? And then, we can have more dialogue at a later note, but it's important that you guys know guidelines change every day, B. Nothing waits for you. And this is why I always preach, don't wait to buy real estate and wait, because guidelines change every single day. Programs change, interest rates change, fees change, structure of loans can change. Just because a bank is offering a bank statement loan today, don't mean that program will be around tomorrow. You know what I'm saying? Shit, they trying to ban TikTok in America. Like, you see what I'm saying? Like, if they can try to ban social media, if they don't like this program, they could say it's illegal now and you can't never do it.
Yeah.
You understand what I'm saying?
Right.
Down payment assistance programs could dry up and have no money. How? Did they even do we have no debt thing? Are they still going through that motion,
right.
Jordana?
They're still going through it.
Like, I mean, come on. Anything can happen in life. So my purpose of sharing this information is to educate our audience and you two on you got to make moves, man.
This is like a really high level conversation. Do you think that this is happening because of like all these layoffs, all the pending?
No, this is
restrictions?
happening because production is down, man. This is a money grab, plain and
Okay.
simple.
Yeah.
So it's all about the money.
Of course. What you
No.
think this is nonprofit?
I
Do you
mean-
think, and I'm going to be real with all of y'all, right? Let's keep it just a buck right now.
Mm-hmm.
Inflation was as high as 9.1% last summer. Things have started to trickle down on certain things.
Yeah.
Gas prices have definitely gone down, this, that, and the third.
Not eggs though.
Not eggs. Lumber has gone down to a certain extent, but you think people who've now been accustomed to charging a certain fee, you're going to lower my price? I'm going to make less money? No. People have already been paying it. So you think when people are making a certain amount of money, they want to lose that? Especially in banking? When Fannie Mae and Freddie Mac are guaranteeing majority of the loans, I forget the percentage, but it's a whopping probably, it's probably definitely over 75% of all the
America,
loans
right.
in America, right? They're on the hook for majority of the mortgage debt in America. Do you think they're going to try to lose money?
No, I
No,
don't
they
think
can't.
so. But I do think, just respectfully, I think there has to be some kind of moral code. I don't know.
There's no fucking thing as moral
No,
in
all right,
business.
okay, Matt.
There's
all right,
no
all right.
moral. This is not a moral business. What are you talking
it's
about?
not, but I
this is
understand
I
that.
give you money, you pay me back. Business.
Yes.
It's I give you money, you pay me back, absolutely. But I'm trying to say
Yes.
is that like it just seems like it's gonna get harder for the regular person to purchase a home. That's what I'm trying to get at.
Duh.
And I just,
I'm just saying.
I just think,
what have I been preaching?
yes, you have. But this is if you haven't been
Case
reading.
in point,
Oh my
institutional
God.
investors buying up everything.
Yes.
Wall
But I
Street
just,
is buying up all the real estate. I buy in.
and I could say it's effed up. I'm just saying that. Like it's kind of.
It is effed up if you play on that side of the fence.
No, it's not really messed up. I mean,
It's
people
business.
it's business, so they have to make their money back. You
This is
can't-
a
there's no
cap-
emotions when it comes to this stuff, so they got to make. You know what I'm saying? Like that's just how everything else works. Not only in real estate, like
Not
you know.
Tooks becoming part of this.
no, but it's the truth because I'm sensitive, but you can't be sensitive when it comes to stuff.
You can't
like
have
that.
emotional about this. This is not. You can't be compassionate. Somebody's willing to lend you money to buy real estate.
Yeah.
So they make the rules.
No, yeah. I get it.
If you don't
Either
like
get
the rules,
down
go
or
pay
lay
all
down.
cash.
I get it. I get
If
it.
you don't like it, go pay all cash.
Damn, that ruthless. I feel attacked. I mean, listen.
I'm saying,
I'm just
if
saying.
you asking me for $300,000, I can impose anything I fucking want on that.
That's true.
If you're asking me to borrow $1 million to go buy your little fucking multifamily in Brooklyn, right? I'm not saying. I'm just
I'm about to
saying.
walk out, y'all.
No, but I'm
I
saying.
feel attacked. It's coming. It's right here,
No,
guys.
but you didn't buy $1 million multifamily. It's worth $1 million, but you didn't pay $1 million, right?
Yes.
But I'm just saying in general, if you're asking me for any dollar amount, I, as the person who is the lender, I get to impose anything I want on this to make me feel more comfortable
Right.
with lending you the money and to determine your ability to repay me back.
Because in a sense, it's a risk for you too.
Yeah.
It is a risk.
Right.
I have a
is,
risk
yeah.
of never getting my money back.
Yeah.
I think-
That was my point. It's a risk. It's your money, so like you don't know if they're gonna pay. Anything could happen. You could lose your job, but it's
Right.
like you got to get your money back. It's my money that I lent you, so it's like you got to figure out a way to get it back.
Now, another question we kind of were talking before we started taping. So how come some lenders, like explain the selling of loans if we have time for that, right?
We have time for this.
Because now I want to get spicy. Because you was trying to get spicy, I want to get spicy too, right? Because like, how come when somebody buys a house from somebody, the loan, then you get a letter in the mail saying your loan has then been sold to this other company. It's like, wait, what happened to the person? I'm just saying.
It ties into everything we're speaking about, right?
Okay.
This is not non-for-profit. So another way that banks make money is by selling your mortgage note, right? So remember, the most important documents that you're signing, you know that closing package that's like this thick?
We know.
So all of you guys who are about to go buy a house this year and it's your first time, congratulations. You're going to sign your life away. And the package is going to be this thick.
It takes hours.
And it's going to take an hour or so, maybe two, right, to go through all this paperwork. And if you're one of those people who need to read all the paperwork before you sign, good Lord, bring some coffee. You will be there for a while, right? But there's a couple pages in that thing that is very important. Obviously, your deed, but most importantly, that mortgage note, a.k.a. your promissory note to pay the lender back. And on that promissory note It's going to break down your terms and conditions, your interest rate, how many years, what's the principal and interest payment, do you have a prepayment penalty? It's also going to say, it's going to have the due on sales clause in there. If you change ownership of your deed without written permission from the lender, they can call your loan due.
Yes, we talked about that previously.
Yep. And it's also going to contain in this mortgage note, which is a couple pages, it's also going to state that the lender has the right and reserve the right to sell the loan to anybody they choose to. Now, when you sign that, you technically agreed that they can sell the loan as they see fit. Right. Now, since we're speaking about Fannie Mae and Freddie Mac, Fannie Mae and Freddie Mac is not the debt collector.
Okay.
Right? So when you sign your mortgage and it goes to that mortgage company, you get that mortgage statement, they are the servicing lender. Right? That means they're collecting the debt, they're paying the homeowner's insurance, they're paying your property taxes when they're due. They're not, they're the servicer. So if they sell that mortgage note to Fannie Mae or Freddie Mac, then they get what's called a SRP, Service Release Premium. Now that can be a point, 2 points extra that they got for selling that mortgage, but they're not going to sell one loan at a time. It's sold in the bundle, right?
It's a cold world.
No, this is real shit. This is what happens.
This is business, so really business. You're breaking it down. This is like behind the scenes, I feel like.
Yeah, this is the behind the scenes that you guys don't even know exists.
Okay.
So they pool them up and they put them in the package and then they sell it to them. So they may sell a pool of 5 million, 10 million, and it'll be like in these buckets of like this pool will have, this is the 720 to 740, you know, this is the multifamilies, you know what I mean? Bang. And they sell it. Fannie Freddie buys it, and then now you'll get another letter in the mail. Even if that lender still is retaining the servicing, Fannie Mae or Freddie Mac will send you a letter saying they just purchased your mortgage loan, the mortgage note, don't worry, your terms, your conditions, nothing changes.
Right.
Now, how they really get the money is now Fannie and Freddie are trading this as bonds, MBS mortgage-backed securities on Wall Street. And this is when now they're really making money. This is how they're able to leverage and make more money because now people are buying these pools and investing into them. So it's a whole money play in the mortgage note game.
And when that next person buys your mortgage, it's safe to say the terms are going to stay the same, or
it's always stay the same because you signed a promissory note
that no matter what,
no matter how many times that mortgage is sold, it will, your terms and conditions stay the same.
All right, unless you do something.
What will fluctuate will always be your property taxes and your homeowner's insurance, and that's why on the promissory note it says your principal and interest payment. It doesn't include your escrow because that fluctuates. We don't have no control over that. That has not. We're not the insurance company, and we're not the town where you're paying the taxes to.
Got it.
You're paying back the bank, the principal and interest over the allowed term that you chose to take out.
Got it. Okay.
Right?
Okay.
Now, what happens is in a lot of cases is that servicing lender now can sell their servicing portfolio for a profit also to another lender. So when you see lenders, your loan was with this one for 1 year, then it was with this one in 2 more years, and then it was with this one for another year. That's when the servicing lenders are now selling amongst each other and they're packaging up large portions of their portfolio for whatever reasons they have. Maybe they need to raise capital. Maybe they just want to get offload. You have if you have lenders that will specifically want subprime type of paper, 620s, 640s, and they'll buy that and they'll pay a little bit of premium and, you know, they'll service those debts too. So even if that does happen, it really doesn't matter because your terms don't change. Now your customer service could change.
Right.
And that could suck from a consumer experience, and there's nothing you can do about it, right? You can't say, I don't like you, sell me to someone else.
Sell me to somebody else, right? No.
You just got to deal with the BS.
This is all fascinating. And so with the taxes, last question, so with the taxes, it's kind of, you have to do your due diligence to make sure that they're all on the same page, right? Because the only thing that's staying the same is your interest rate. But like, let's say your tax, because how do you know if they're communicating to each other that like, okay, this person has to pay Because when I pay a mortgage, my taxes, all that stuff.
Oh, the bank is going to make sure your taxes are paid. You want to know why?
Oh, okay, why?
Because taxes are first lien.
Oh, okay.
The town can foreclose on your property if your taxes are not paid, even if you're paying a mortgage payment.
Okay.
This is why banks want you to escrow
Got it.
the
Okay.
taxes and insurance, because let's just say you have a principal, interest, tax, and insurance payment of $4,000, right? But your principal and interest payment is only $2,000, right? And let's just say your escrow is 2, so 2 and 2, easy numbers. Let's just say if you didn't escrow, and if you only paying your mortgage payment, you're only seeing $2,000 a month, every single month, right? But your taxes are due quarterly, sometimes semi-annually, twice a year. You know what I'm saying? Sometimes once a year. And a lot of people just don't have the financial discipline
To go back,
to
right.
go back and pay. My taxes are due every 6 months. I'm paying them on my own. So if your taxes, let's just say, are $10,000 a year, you got to pay $5,000 every 6 months. You may not have the money.
Yeah.
You see what I'm saying? And now, interest, penalties, and then if you don't pay a year, 2, 3 years, the town can foreclose you. But you can still pay your mortgage.
Okay.
But you're choosing to pay partial of what your responsibility is because you might be going through something too, and you're like, I'll catch up at another time. That happens all the time when people don't escrow. But if the bank gets wind of it, because what will happen is, now mind you, the debt is owed to you, to the bank, I mean. So on your deed and everything, it has them as the mortgagee. So the town will send not only to you, the homeowner, but they'll send it to the bank as well that your taxes are delinquent if you don't escrow. Then the bank will just go ahead and pay it and then force you
Because
to escrow.
because they want to be safe. They got to protect.
They will protect their
No
investment.
bank wants to say, yeah, we're going to go into like foreclosure, I guess, So that makes sense.
No.
They want to protect.
Why
yeah.
would they want to lose my $400,000 I just put out for you?
Right.
Why would I want to lose that? We got like 300 people in here. Make sure y'all like this video. We don't got enough likes on this video. We dropping a lot of information here for y'all. So
I
make
feel like
sure
too much
you guys
information.
like this video. No, it's a lot.
It's a lot.
here.
It's a lot.
And you're probably gonna have to rewind this because
it is a lot.
there is a lot, and this is why I be showing there too, because I got so much I could talk about. But I be hesitant to have these type of conversations because it goes over people's head.
Yeah, it does.
But again, to summarize the topic of this video, the cost of mortgages will rise. The cost of interest rates will rise. Even with interest rates going down, it still might be expensive for people come April, definitely May 1st, when these new LLPA, loan level pricing adjustments, once they go into effect, it will get more expensive if you have low down payments, high debt to income ratios, buying multifamilies, doing cash out refinances. You can expect, even if the national market rate goes down, you will expect higher interest rates than what you would probably get today. And this is why I preach, don't wait to buy real estate. Buy real estate and wait. Because not only can the market change and correct, products and guidelines and fees and cost structures change accordingly. Hand in hand, real estate and mortgages are husband and wife, brother and sister. You know what I'm saying? Peanut butter and jelly, Franks and beans and white rice. They all go together.
Franken beans and white rice.
Ramen noodles with Tabasco. It goes together. You understand what I'm saying, Jordana? Like, what's the soup you drink on your New Year?
Soup jumu.
It goes together.
It goes together with bread, yeah.
But on New Year.
Yep,
right?
it goes together.
It goes together. So when you see the real estate market and the housing market going through different things, what do you think is going to happen in the back end on the lending side?
Right, it makes sense.
We're going to go through our things and our protections, not me, but as an industry, to protect what we have to do. And we're not going to lose money if we cannot. We can't. We can't lose money.
That's true.
Banks won't lose money if they why would they?
He said we're not going to lose. He said we're not going to lose.
No, I'm just keeping it a buck. Why would we?
So I have a lot of friends that always say like they're gonna wait. Markets, everything's gonna go down. I have a lot of people who say that, and like, what do you say to those people who always say like, oh, I'll wait a year to buy, a
But
house
it's your industry, so you just want people to buy houses.
Yeah, no. So be. I know you're pretty transparent, but sometimes I feel bad because I'm not really a loan officer like yourself, so I can't tell him like, I don't know if that's a good idea. Why don't you just buy right now? Like, so what would you say to that person? Like one of my friends who feels like they should wait because, oh, the market's gonna crash or this is gonna go down. I literally hear that from all of my friends. Every single conversation when, you know what I'm saying? So it's like, what do you say to those people?
Okay.
Good luck, Chuck.
Good luck. Good luck.
You can say that from your perspective, but like,
No, you can say it too. Good luck.
okay.
Look, I'm not here to convince you to build wealth.
No, 100%.
I'm not here to convince you to build wealth. I'm not here to convince you to make money.
Yeah. Yeah.
I'm not here to convince you or sell you. Oh, you're a loan officer. It's in your best interest to tell us to buy now. Shut the fuck up. It's not in my best interest to tell you to do anything. It is in my best interest to run this YouTube up and to get what's mine from YouTube and give y'all information that you can make your own decision on. But I'm not here to convince you to build wealth, man. I don't care if you buy or not. Good luck.
Yeah.
You know the people who was in 2018, yo, my Facebook memories be popping, right? I love this. I'm glad I was posting on Facebook, 5, 6, 7 years ago.
You've been doing this, right?
Because that's when I was really getting into it, and I started posting information, and no one was listening. I had like 5 likes and 1 comment on all these posts, and I'm like, damn, I wish these people wasn't paying me no mind, right? I was really trying to be MG the Mortgage. I was Matt G Home Loans. You know what I'm saying? That was my name, Matt G Home Loans, right?
Corny.
Super corny. No one wanted to listen to me, right? And I was telling, like, it was an article. There's so many articles. I'll be posting in my stories too. Like, see, I told y'all 5 years ago, 6 years ago. But I'm not here to convince you. The people who listen to me are up and stuck right now. The people who listened to me in 17, 18, when you first came around, they're winning. I'm winning.
Yeah.
Yeah.
They're winning. They got cash flow. They got equity. They've been pulling out equity annually, buying more properties, investing into businesses. A lot of my clients were able to start businesses where now they still keep their W-2s and they got profitable businesses, all because they invested into themselves and took a leap of faith. You understand people been saying the market's going to crash since the market crashed?
Yeah.
Since the Great Recession, people have been saying the market's going to crash again. Every single year, it's always the market's going to crash. But you know what's been the one consistent thing for the last 6 to 7 years? Inventory's been low. I literally have posts that I posted highlighting low inventory from 6 years ago. Inventory just didn't get low because of COVID. The shit was low before COVID. I was saying low inventory on stage in 2019.
Well, the one takeaway I will say, besides like hearing the hot takes of, oh, market's going to crash, I do think the biggest takeaway is that you need a place to live, no matter what. I think if you just break it down to that, you need a place to live. So either you're going to pay somebody else's rent or your rent. And I'm not even going to, you guys know I hate home ownership. Like I talk about it all the time. I hate it, hate it, hate it. I fucking hate it. It's not in the book, all the stuff I go through. I hate it. I really do, y'all. I so do. But I will say it's mine. You figure in a year or so, we spend a lot of money on dumb stuff. You spend money on shoes, clothes, bags.
Travel,
Dubai, right? But if you invest into a house, you get your return back really quickly, within a year at least. Within a year.
No.
Well, in my case.
In your case.
I don't know about y'all. But
Well, because you listen.
Okay.
You listen. I like that shot, though. I like that shot. Yo, you listen. Right? Don't that feel good to say that?
It does feel good.
But you hate home ownership.
But I still hate it. No, because we laugh, we joke. I do think.
But did you hate renting?
I did hate renting.
Okay,
too.
so you're going to hate
Right.
something, so pick your poison.
Yep, you are.
Pick your poison. All of this, I hate renting, I hate home ownership, I hate investing, I hate dealing with everything I have to deal with. But you know what? I love my lifestyle. So what would I rather have? The lifestyle that chooses me that can build wealth.
Yeah.
You're building wealth. Tooks will begin to build wealth. Our audience will begin to build wealth. Pick your poison.
Right.
So what do you like? So what do I tell those people? Pick your poison, man. If you want to stay renting or living in your mama's basement, go ahead. I don't care.
I mean, they say this to me out of conversation. It's not like I'm trying to tell them like.
No,
when to
I know
wait,
that.
You know what I'm saying? It's just like I'm like, damn, like, Well, it's like last year you said the same thing though. You said you was gonna wait till this year. So now this year, like, and they have the money, but they're just for some reason they feel like something's gonna happen, where it's like everything's gonna go back to like COVID rates or something like that. Like,
But COVID was just a one-off, though.
yeah, but even
I know once in a
during COVID,
lifetime.
people were saying they were gonna wait, right? I mean,
People were trying to wait till rates got to 1% before they purchased. I said,
Right.
are you out of your fucking mind? I said, it's 2.5. How much lower do you need it to be? If you want 1%, go to NACA.
Right.
And people who was doing NACA during COVID, who listened
Yeah.
to our content and stuff, shout out to them, Dara, because a lot of people took out NACA loans nationwide because of these videos we did started in 2020. I know people who got 0.5.
Yeah, there was one girl you had on your channel when I was watching and I was learning. I forgot her name, but I have to shout her out. But she had like a 0.5. I was like, what is this NACA program?
Yeah.
And you had her on. I don't remember, but we got to find her. But certain people really did run it up. you
But
know?
that's what I'm saying.
gotta
So
listen.
what are you what are you waiting for? I've been preaching this for years. Why are we waiting to buy real estate in the black and brown community? We are already at a disadvantage historically because of racial discrimination, especially for black people. So black people, in my opinion, none of this stuff applies to us. When people say wait, the people telling you wait all own.
yeah,
Really think about it. The people who are talking to you and telling you to wait all own. They have property, multiple probably.
yeah,
So if you are someone who doesn't have property and you want to buy property, now I'm not going to say real estate's the end all be all.
No.
I never say that. There are other investment opportunities where you can get a much faster rate of return without all the headache, right? If you got intellectual property, you can invest into YouTube and create a channel. And if you have the patience, your return on your investment will exceed what you are probably doing in real estate because you can run it up on YouTube, right? If you have a great business out there, you can start a business. You can if you know stocks and know how to trade, you can trade when stocks are winning or losing. You can make money in the stock game, right? But brick and mortar will never go nowhere for the rest of our lives until the planet blows up. There's always real estate. God forbid, right?
Yeah.
Think about it. When will it not be brick and mortar? Toys R Us can close down. The building's still there.
yeah.
Who owns the building?
That money.
Somebody owned that building, right? Now, and if Toys R Us owns the building, guess what? They can sell that shit and make some money back to pay back whatever they need to pay back, right? Or they can lease it, keep it as a rental, and rent it out to another big box retailer. Brick and mortar goes nowhere. So us as black and brown people, why are we hesitating? What are we waiting for? We've been waiting for hundreds of years. What they say, reparations. This is our opportunity to get our reparations in a way that we can. We can't depend on the government to give it to us.
Especially when people, I was born in Haiti, but people in this country have been fighting so long to get into home ownership. So I don't see what the wait is for.
Word.
Ancestors and
Yeah.
That's another thing. We got Black History coming up. And look at all the people who have fallen before us. And this is what pisses me off about people when I hear, like your friends, oh, I'm going to wait. Especially if you're black, it's like, yo, people died for you to have the right to buy.
Right.
Like, really died for your right to sit here today, 50, 60 years later, to be in the positions that we're all in right now, free as a bird, to live the life that we want to live unapologetically and do whatever the hell we want to do. And we're sitting here playing with these people's past, playing with their journey, playing with their struggle to give us the opportunity to have equal opportunity and have freedom. I'm not playing with that. You're playing with God's blessings every single day. You playing with yourself.
I like Holy Matt.
No, seriously, I've been in church 2 weeks
I
in a row.
I like this. But no, it's accurate. Especially to me, this is the greatest country. You can make a lot of money here.
Yeah,
You go
look
to
at all
other
those-
places. Black people, we were out in UK. And black people out there are like, oh, so you could just buy? Like,
Yeah.
it's crazy, bro. Like,
Bruv. No, seriously, they was running up on us like, bruv, I love what y'all doing back in the States, bruv. Like,
it's not easy.
it's not easy. That's
Right.
the home of white supremacy to the highest level.
They
Over
the
there,
OG
they're the OG conquerors. They conquered the world, basically, over there. People over there, like, when you really think about history,
Right.
it's like, look at what they went through over on that side of the world. I mean, just the world in general is all corrupt. But here in America, Black people fought for black people to have the rights that we have to have today, and people are playing with that by sitting here, by not taking advantage of these opportunities. I don't care if you don't buy real estate or not, but why are you letting money just sit in your bank account doing nothing?
Yeah.
Why are you not sitting here looking at a way? If you're going to rent, cool, rent. Hell, I rent right now. I own, but my circumstance is different, right? I only rent because we're not going to talk about that. But
What do you mean? What do you mean?
I'm talking about my personal life, Tooks.
Yeah, well, you rent, but you have property.
Yeah, I say I only rent because I'm newly separated. I didn't want to say that.
but I'm saying you have property regardless. So if you have,
Yeah,
if
of
you want to
course.
rent, you still own
100%.
something,
But I could have
you know?
probably bought a house, another house, while I wait for Garland Gardens. But I chose to go rent something, right?
Right.
I rent for intention and purpose right now because I'm waiting for Garland Gardens to be
Exactly.
finished. But yes, I own multiple properties, but I still chose to let me go rent right now, right? So if you're going, I'm renting with intention. I'm waiting for my house to be done, God willing, in the next 6-7 months. Because I'm not built for renting. I got a noise complaint like 2 weeks ago, too.
You got a noise complaint?
Yo, bro, I paid too much money for a noise complaint. I'll tell y'all this
What was he
offline.
doing? Oh my God.
It was a Saturday at 3 o'clock, and I'm playing freaking music, and it wasn't even loud. It's the sound bar and the subwoofer and everything like that.
It's pretty loud.
But it was on like 20-something, and the fools,
It's pretty loud.
the
though.
fools below me, like, and this is a luxury building, by the way, y'all. I paid too much money for this shit, and it's just like, I got a property manager call me a noise complaint, and that's the moment I said to myself, I'm not built to be a tenant. I'm not built for this. I'm not built for
that's
this.
crazy.
It's Saturday, 3 o'clock in the afternoon. I'm just trying to clean my crib right now, and I'm like, what?
You probably was playing something wild, like crazy
No,
loud.
it don't matter
Probably
what
had
I
a
was
good
playing.
bass
It's
to
3.
it.
It's 3 o'clock in the afternoon. Leave me the F alone. What? A noise complaint? But that's neither here. That's another story. I finished that offline. But I don't even know what I was saying. Yeah, that distracted me.
You rent with intention.
You rent with intention, yes. So if you don't want to buy primary, rent where you live, invest the rest.
Right.
It's real simple. But I know people that just rent and do nothing with their money, and then I see them all over the globe. I'm like, damn, I haven't even taken a vacation. And I know I got more money than this guy.
Right.
Like,
Yeah.
what are you doing with your money?
Right.
That's like what we were talking about earlier, like, you know, like looking flashy on social media, but you could be using that money for something else.
Yeah.
So that's a lot of people. That's the majority of people on the
There's
internet.
a lot of people in the comments, and everybody, make sure you guys just drop some gems. But this was great.
No, this was a good conversation. Drop some gems. Hit the like button, please. We got
Yes,
like,
he was playing Biggie. That's what I was about to say to you.
No, I wasn't playing Biggie. I wasn't playing Biggie.
I literally
I think I was
was-
playing DMX.
Oh, okay.
Max at 3 a.m.
Oh, it's hot.
3 in the afternoon.
Oh, it was 3 in the afternoon.
Yeah, it's not 3 a.m.
I'm about to say 3. I'm like 3 a.m., bro. You should probably.
No, 3 a.m. I'm sleeping.
Okay.
I'm old.
So
I'm
3
sleeping.
3 p.m.
Yes.
and somebody complained.
Playing DMX,
Why would I be
DMX?
cleaning at 3 a.m.?
I don't know. You probably. You
No.
know what I'm saying?
I'm sorry.
No.
DMX is loud.
No, it's not loud enough
He
for.
yelling all the time.
It don't matter. How you complaining on me? But that made me realize I'm not
Yeah,
built
that's
for
crazy.
this. I'm not.
3 p.m. Nah.
Bro,
chill.
I called my architect. Said,
on a
yo,
Saturday.
On a Saturday.
Yeah,
I
that's
called my
crazy.
architect right away. I said, yo, bro, I don't care who you got to bribe in this office to get my permits reapproved.
Get 'em.
But I need this done because I can't play my music at 3 o'clock in the afternoon.
Yeah, I think the moment for me about being a tenant was just the fact that I could turn my heat on by myself. Like, that felt good. Like, that felt
Being
really
able to
good.
turn your heat on?
You know, like, it was just like, oh, okay, like, I'm cold. Why am I trying to put a sweater on? Because, you know, sometimes in the buildings, like, especially New Yorkers, you either got, like, the project heat or it's, like, cold. Like, the landlords in New York, they don't have any in-between. So, I guess the PTSD from the trauma from always renting, I was like, well, let me put my, like, I was like, wait a minute.
You control your own heat. You pay your own bill.
I was like,
Yeah.
that felt good, you know? So, yeah.
No. Agreed. I'm not built to be a tenant because of that noise complaint. But to put a bow on this, all right? First of all, y'all got to put some likes in the comments. 330 of y'all in here. Like put some comments in here. Fires, whatever. The LLPAs, the costs are going up. Contact your lender. First of all, you should be working with me. Look, let me tell y'all something. This year, y'all need to be working with me. Link is in my bio. Link is in the description. Like, y'all need to be working with me. Apply with MG.com. We in 21 states. let my team help you. If your lender didn't tell you this is already telling you that you need to work with a new lender because they're not keeping you updated on the changes and everything that's happening. If you are a realtor, if you go to my Insta, we're going to put this in the description too. I'm going to send you this link. If you are a realtor and you want to work with me, we would love to be your preferred lender. Let's set up a partnership call, discovery call with my business development manager, and let's see how we can do business together. We do a lot for our realtor partners, so we would love to partner with you as well. And yeah, if you just came, watch the beginning of this video, we break it all down. I love the fire emojis. Make sure you guys like the video. And yeah, we're going to go live again probably tomorrow. Yeah, definitely tomorrow. Let's go live because I'm not going to be able to do no lives on Wednesday. And I don't think Thursday either.
No, we'll have some content going out regardless.
Yeah, we'll have content every day this week. 4 p.m. Eastern Standard Time. We got content dropping every day, but I'm going to go live. We went live today. We're going to go live again tomorrow. And then tomorrow I'll let you know what other day we're going to go live this week. But we're going to try to go live at least 2 to 3 times a week. But we got some pre-recorded content that we're going to drop Wednesday, probably Friday as well. But yeah, this was a good episode. Jordana, you coming back tomorrow?
Yes, sir. I'll be here.
Well, Jordana was going to be here. I saw people in the comments saying that they like your personality, Jordana.
You know what? I think me and you, we just, we understand each other.
Yeah, I kind of like this 3 the hard way. Do you have any more questions, Tooks, before we wrap this up?
Nah, there's some questions in the comments, but I'm sure
let's answer a couple of them real quick before we leave.
So someone asked,
any questions about LLPAs? Put your questions right now.
Are you in Alabama?
Yes. We landed in Alabama.
Vegas?
No Vegas.
PA?
PA, yes.
If I have $80,000 in the bank, can I get a loan for a condo in New Rochelle for $300K?
I don't know.
Reach out to the team. Right.
Reach out to the team. ApplyWithMG.com or go to the link in my Instagram bio. You can set up a consultation. We're going to put all those links in there. You can set in the YouTube description too. You can set up a consultation with my team and we'll be happy to pre-approve you.
Do you help first-time home buyers?
Yes, I help first-time home buyers and investors.
Yeah, there's another repeat of are you in PA? And
yes, I'm in PA.
You work with high credit though.
I work with all credit.
No, not all credit, child.
Well, hold on.
Don't waste his time. Do not waste his time. You will not get approved.
Wait, hold on.
I had to correct him real quick.
Yeah, minimum credit score for FHA is 580, conventional 620.
Do you work with 580?
Yeah, we closed those for 580.
All right, so
yeah,
that's good enough.
We'll get it done.
Do you provide underwritten pre-approvals?
Absolutely, we definitely do. Come get your underwritten pre-approvals. I put out a whole video about this. Absolutely, we would love to give you an underwritten pre-approval.
I like this question. Well, because I already asked that, but what do you say to someone who's discouraged at the process of buying? We kind of sort of spoke about that.
Why are you discouraged?
I don't know.
No, that's why I'm asking. This is a male or female?
It is a. Oh no, that's the other one. This is.
What's their name?
All right, it says RZ.
RZ, why are you discouraged? Because there's many reasons why you could be discouraged. But I would say, don't be discouraged. This is what you want to do. Mm-hmm. This is what the life you chose. So keep going.
Wait for that to come back. For LLPA, is it best to get rate locked in before May if you're using low down payment?
Absolutely. You need to find a house, get in contract, and you need to lock into something immediately, probably within the next 45 to 60 days, 100%.
Cool.
We would love to help you.
I'm in the Midwest. How can we connect?
Are you a realtor? Are you a buyer? What are they?
Well, he looks like
well, no matter where you are, links will be in the description. If you're a realtor,
Right.
You can set up a partnership call with my business development manager. And if you are a buyer or current homeowner and investor, you can schedule a consultation or apply. All the links will be in the description, or you can go to ApplyWithMG.com.
Can you use money from a HELOC for down payments?
Yes.
I spoke with the lender that said the money needs to be in checking account.
Yeah, you have to move it from your HELOC to your checking account,
Mm-hmm.
and then you use your checking account. Yes.
Okay.
So yes.
Are there down payment assistance programs in Georgia?
Yes. There's down payment assistance programs all over America.
I'm going to read this because, we're pretty transparent over here.
Okay.
I thank you for the content. However, the cursing is turning me off.
Ooh. Who said that? Who said that?
Okay.
That was something that you kind of said you were going to work on.
Fuck that. I'm not
No,
working.
Come on, bro.
I did tell you. Full transparency. Toots, when I got on board, did I not tell him to work on the cursing? I did.
Yeah. No, well, we had a conversation in Atlanta
conversation.
that
We
you
did.
did. No, well, this last week we
Okay.
did say that you were going to work on.
On stage.
Well, I think it kind of applies over here too.
No, it don't.
We don't want to get. I mean, I don't know if you can curse on here, but we don't want to have any like monetization issues.
We
either.
don't have no monetization issues.
We don't, but still.
I
think
said
it's-
on stage,
Yeah.
I will limit my profanity because I don't know if there's children and stuff like that in the building, right? But if you watch my channel, parental discretion is advised.
Okay.
I will drop an F-bomb or 5 or say something because this is how I speak.
Yeah. No, it's.
No,
it must be a
I
New
get
York
it. But
thing.
when I first met you, didn't I say, I was like, hey, maybe you could like tone
And what
down.
I tell you?
It was curse words. Well, I'm trying to work on it, you guys. I'm trying to work on it.
Look, man.
He got me cursing now. Like
I don't have you doing nothing.
I don't even curse this much until I started working with him and Tooks. So
I don't really curse like that. I mean, not on live at least.
yeah. We're gonna work on it. But
Look,
either way,
I appreciate you watching the channel, but I will tell you like I tell everybody else. Parental discretion is advised. I cannot control my potty mouth at times. I do my best to find other words, but sometimes fuck just sounds better.
I guess. All right, we'll work on that. It's for a female.
I wonder if people tell Gary Vee to stop cursing.
No, I knew you were gonna say that. I knew that was coming. I
No,
knew that
but
was coming.
seriously, why you always gotta tell the black man to stop doing something, but do y'all tell the white people to stop doing it?
That's true. They probably.
that's a fact.
That's a fact. That's true. That is
Gary,
true.
like,
That is a fact.
I'm just saying, like, come on, like, what the fuck? We grown. We grown.
Yeah, Gary Vee, he says whatever.
Exactly my point. So why am I not gonna say whatever I want just because I'm black? I gotta fit a certain type of thing. Like, no.
No, you're right. You're right. Well, I wasn't saying it for a race perspective.
I'm saying it from on stage. I
Yeah.
don't want to use profanity on stage because I'm on a stage. I'm at a certain level. And even on this, I don't try to use profanity.
It's just a level of comfort probably here. That's what it is too.
No, even on stage.
Yeah, but there could be kids in the.
But on the last stage, I was talking my speak to them. Fuck that. You know what I'm saying? Like, it's just that's how I'm wired, yo.
Yeah.
I think
Don't look into it too much. It was just a comment. We read it. It's cool.
Don't read comments like that again.
Because he's in his head right now.
Yeah, no, I'm not in my head because I'm just like, yo, why do people always say that to black people?
Yeah.
I don't get it.
Well, on a good note, it was for a female. Can't necessarily find much on the market and pricing. This is to the person who was asking about, being discouraged to buy. So.
well, I want to answer that. I think if you're a female, you should be like right now is go time. I think if 2020 and 2022 and 2020 all taught us anything is that women, you have to do it on your own sometimes. That's just my hot take.
Yeah, I would tell you, like I would tell my daughters when they get ready to purchase a crib, you don't need no man.
Right.
like you don't need no man. You don't like, yo, do you, ma? Like, you're a queen. Act like one. The crown is on your head for a reason. Like, don't be discouraged. Like, do you. Whether you don't have a man in your life, no matter what obstacles are coming your way, like, do you, man. This is going to be hard. No matter male or female, it's going to be hard.
This was the girl with the $80,000 in New Rochelle, right?
No, that was the
nah.
discouraged
Okay,
comment.
okay.
Discouraged, yeah.
Nah, just do it. Just
Do it.
Do it.
Go for yours.
Yeah.
Life is short.
Because
Play
you're going to
hard.
wait for a man and,
Not even like
sassy
but,
men out here.
Sassy
God.
man out here.
No, but in general, you're gonna have lemons thrown at you in this.
Right.
You need lemon. You gotta still make lemonade.
That's a
I've
fact.
been working on my house for almost 2 years now. I've been paying a mortgage. This March will be 2 years. I haven't slept one day in this house. I'm vexed. But this is the life I chose. I chose to do this stupid ass project. I'm just saying to myself, MG, think about Christmas this year. Think about Thanksgiving.
It's going to be nice.
It's going to be more than nice, God willing. It's going to be incredible. Think about barbecues and bar mitzvahs next summer, right? Because this summer I'm probably not going to be able to have my barbecues and bar mitzvahs because we're still going to be working on the backyard and everything like that. But it's just,
Bar
yo,
mitzvahs.
huh?
Bar mitzvahs?
I'm just saying, barbecues, bar mitzvahs, that's like one of my lines.
Oh, I didn't know. I was gonna say I didn't know you was Jewish. Like I thought you.
No, I'm
Tooks.
just. Oh my God, this guy. All right, this
All
guy.
right, we gotta go.
What else? What else? We got any more good comments?
We have. Can I take a HELOC? Can I take the HELOC without my co-borrower?
Whose name is the HELOC in?
Not sure. Not really sure about that. What rates do you have for vets?
Apply with MG.com. Apply. Upload your docs. Let us pre-qualify you, and then we can tell you what the rates are.
Any tips? Any tips on homeowners looking to purchase next home but want to keep first home as investment, first rental?
They want to keep the first home that they have as an investment
Yeah.
property and then buy a new primary residence.
I'm assuming that's what they're saying. Yeah.
The best tip is apply with MG.com. Let me and my team give you the blueprint. Let us review your financials, give you the blueprint, and let us help you achieve your real estate goals. This is what we do. So if you are a homeowner, you looking to purchase, refinance, whatever it is, guys, it's hard for me to answer generic questions like that without looking at your entire scenario. So this is what my mortgage team is here for, man. We're here to help you guys achieve your real estate goals. So apply with MG.com. Link will be in the description, or go to the website, complete the form, check your email for instructions, and let's work together.
And how can I put my privately owned property in the name of my LLC?
We covered that, no?
Yeah, but I mean,
How can we, Toots?
this is YouTube, so we kind of have to
Cover it
it's
again?
Fresh people. It's fresh people every single time, so you know.
Do you have the link for that video? We have a video. What is it called? LLC, put properties in your LLCs or something like that.
Yeah.
Yeah.
That was a
Awesome.
great video.
Yeah, I would highly recommend watching that video, and then that would answer probably your questions. Or, again, book a consultation with my team. We have to look at the whole scenario. Look, guys, I want to say this very clear. This is probably going to be a clip. Every scenario is different. Your scenario is like your fingerprint, right? You see my fingerprint? You don't have the same fingerprint as me. We ain't got the same DNA. Every scenario is different. It's customized to you and your situation. So it's very hard for me or any lender to sit here and answer generic type of questions without reviewing your full profile. This entire live was based off of the changes in the fee structures that are happening based off of borrower profiles. You know what I'm saying? So it's not one rate for one person. It's not one strategy or one pathway for one person. Every pathway, every scenario is different, is unique, just like your fingerprint. So I will highly advise, if you want to work with me and my team, if you want to achieve your goals in real estate, apply with MG.com or click the link in my bio or in the description and set up a consultation today.
How much does it cost to get with your team? A lot of people sell their blueprint for so much that it defeats the purpose.
Okay, so let's talk about that real quick. First of all, if you want to book a consultation with my team, it's free. If you want to book a consultation with me, it's going to cost you, right? It's going to cost you a couple $100 for 30 minutes. It's worth the price. If you want to buy any products, we got books for very cheap, along with the webinars that we do. mgbookstore.com, or you can join EYLuniversity.com, right? All very affordable products. Now, I understand when people say, a lot of people will charge a lot of money, and not everyone can afford it. This is why we go on YouTube every day, Monday through Friday, 4 p.m. Eastern, to give you guys as much information for free as possible from a trusted source. That way you guys can go out there and execute. And this is why I say, hey, work with my team, because my team speaks the same language as me. They're trained by me. So we will help you guys, and that's all done for free. Now, if you want to invest into your education at a higher level, because there's a lot that I don't speak about on these public platforms, that's when you have to make the decision, is it worth it investing into the person that is selling the course, right? And that's when you have to do your due diligence about that person. Are they giving a lot of free game out there? Can you go and look at the track history of their content? Because it doesn't matter about the testimonies. I'll be honest with you. People pay for testimonies.
Anybody could do a testimony.
Anybody can do a testimony. You think it's a testimony, but it's their cousins, their brothers, their sisters, and their mothers, and you have no clue, right? But can you go down their pages and look at videos? To me, that's the testimony. What is my product knowledge?
Well, can I add something to that? As a person who used to follow you before we got together, is that if you don't want to pay for the product, I think you have to invest the time in yourself and watch the videos and do your homework. So like once you're like, okay, I'm fully invested in, because just don't watch a couple of videos and think you're ready to buy a house. You know what I'm saying? Like, do your homework, watch the videos. I would say I would watch you guys in Tukes. I would watch Tukes like at least every 3 times a week. And I would just go back. This is before you guys were putting videos out so often, but I would just go back. So when I did the research, I think it was Marsha who commented that it was okay, well, now I'm ready to take it to the next step, you know? So I think with home ownership, and if you're not trying to spend at least like $200 to at least try to get the information, that's the least of your worries. You know what I'm saying?
Yeah, no, I agree with that. And Marcia asked that question is a very good, valid question, right? And I think, you know, the pay for play thing is becoming oversaturated.
Right.
A lot of people are charging for a lot of things and not producing those results. So you definitely want to be careful of who you choose to invest your money in, because look, I've purchased things for people and I'm like, damn, this wasn't worth it at all. But I do my best to try to get something from it that I can implement in whatever I'm doing in my life, whatever the purpose of the course was, to help me so I can make my money back. So Marcia, I would just say you just got to do your due diligence, vet, and don't be afraid to invest into yourself, because the investment into yourself and into your brain, into your intellectual property, you have an infinite return on that investment. This is knowledge. It's priceless. So invest in yourself, but just be careful.
Yeah, I mean, I learned way more here than in college.
That's a fact. College don't teach you what I teach you.
Yeah.
It's very true.
You know?
No, that's true. This is true.
What college course does this?
Nothing like EYL, for sure.
Nothing like MG or EYL, but it's nothing like this.
Yeah.
That's a fact. Yeah, somebody said they paid for EYL for 3 years and they were making minimum wage.
See? You'll find the money.
What are they making now?
Not sure. I'm waiting for the answer. I thought it was like a start to something. So
yeah, but no, that's great though, right?
Yeah.
They were making minimum wage and they've been an earner for 3 years. Shout out to you, big earner, right? And you invest into yourself, and now they're probably making more money.
Right.
Yeah. I mean,
yeah. Yadlin says having knowledge also gives you confidence to make moves. Shout out to Yadlin. We gotta get Yadlin on the channel too.
oh, she's in here. We had her on.
She's a social worker now.
She's a social worker now. Shout out to you, Therese. Shout out to you.
Good.
I'm like, oh, you guys see comments before I do. It's a little late over here.
Sorry.
Yeah. All right, so what we doing? Are we done with this, or are we done with this?
Yeah, I have more questions.
Yeah,
All right.
I think we're done.
Did we answer enough questions for the people?
I think so.
Yeah. Yeah.
Jordana, any final words?
No, I think this is great.
Any other questions about LLPAs or
I don't think.
secondary marketing or any of this stuff?
I think the comments, we're going to drop the link in the comment, right? Because somebody asked, why should I buy the house in May? Just read the article, rewind this video, watch. This is crazy. Basically, I think it's kind of messed up that people are getting boxed out, but you have to take action.
Well, they're not getting boxed out. They're just going to pay a little more.
What you think that means?
Well, who told you to wait till the market's going to crash?
On that note.
Who told you to wait till the market's going to crash? And like those friends of yours, I can't wait if it does happen and they don't have no opportunity to buy nothing, because you know who's going to swoop in and buy everything if the market crashes? Institutional investors. The people who got billions of dollars. Not me, you, or us mom and pop investors. We're going to get the scraps.
Yeah.
The Caesars of the world who have 2,000 properties and can leverage himself crazy and probably get 30, 40, 50 million dollars real quick and go buy up everything. Those are the people who are going to win if the market crashes, not you with your little 20% down.
I mean, these people
stop hanging around with friends.
Nah, these people actually make a lot of money, and they just don't know. You know what I'm saying? Like,
yeah, but it don't matter how much money you make, you ain't making billions.
Right.
They're not making billions, but
You can make a couple. I make money, Tooks, and I said I'm not even going to get it. I'm still going to get scraps.
Yeah. No, I'm just saying, like, even they can buy right now if they want to,
Of
but
course,
they're waiting on.
but they're waiting for something, and when they wait,
Yeah.
and if it does happen,
Yeah.
they still might not be able to get what they thought they were going to get because somebody else with more money is going to. There's always somebody with more money.
No, I know that, but it's just like what I want to know is where the hell these people getting this information from? Like, where are they listening to this? Like, how do you guys even know?
Because there are
stuff
certain
is-
people in life who just like doom and gloom.
Yeah, well, somebody. I mean, I guess they're listening to somebody. They probably heard a podcast or something. I don't know. It's weird.
People choose to like what they like.
Yeah.
Some people like Republicans, some people like Democrats. When you really think about it, right? Who do you choose to listen to? The party that you really like. The Democrats. Like, think about this, right? If Donald Trump, and I know we're going to get political real quick. If Donald Trump had this much classified documents in his possession, this would be all over the news every day, all day. Am I lying, Jordana, Miss News Lady?
you are
With a
not.
husband who's a Pulitzer Prize winning?
Not Pulitzer. Yo, he stayed dragging it.
No, isn't he Pulitzer Prize
He's
winning?
not Pulitzer Prize.
Which one of the awards he won? He won some award.
He has the Edward R. Murrow. Yes, he does.
Exactly. He's award winning. Wouldn't he be writing all types of ish right now
He
about
would be
about
writing.
Trump?
He would be writing.
How many did he write about Joe Biden?
He has written about Joe Biden.
Exactly my point.
He has.
But it's not blasted on Front Street. Like, if it was Trump, it would be all over the place. And look, I'm an independent, just so you know, registered. I don't care about Republicans or Democrats. I vote for what I think is going to be best for myself and
As
the
everyone
general.
else should. That's that's how you should.
I'm an independent, right?
Right.
I'm an independent thinker. But I look at things like that, right? If Joe, like, yo, they just found more documents. It's like, how
On
many
who?
on Joe Biden classified documents in
Yeah.
your crib?
Well, you know what's crazy to me? I know we don't want to get political. We got to wrap up. But it's wild when people don't vote here because I was born in Haiti and I was not allowed to vote. And I just got naturalized and it's my second time voting. So it's wild when people be like, oh, I don't follow politics. I'm like, how? When you pay taxes. You pay taxes. You live here. You know, everything from the bus to the bridges to the potholes, you know, that's all. So I find it like I was crying when I voted for the first time. It didn't work out in my favor, but you know, it was nice.
Yeah, it did because you still executed. So it don't matter.
Yeah.
You still executed on. But I'm saying all this to say people like what they like. And this is why in the general public right now, you're not seeing this all over the news crazy. Like, but if it was Trump, the powers that be would blast that everywhere. Because remember when they found something in Mar-a-Lago and they raided, it's everywhere. You know what I'm saying? But like Joe Biden, like how much documents they gonna find at your crib, bro? You was VP. How you know the rules? You know what I'm saying? Like now you the press. But that's a whole nother story. I'm just saying to say, people like what they like. People listen to what they listen to. It doesn't matter, y'all. Formulate a decision that works best for you.
Yeah.
At the end of the day. And there's always going to be naysayers no matter what side of the fence that you're on. It don't matter. Who cares? That's why when you ask me, what do you say to the people who say they're going to wait for a crash? Good luck. Okay, no problem. When you're ready, call me because I'll be here. And for the people who say, well, it's in your best interest to tell everybody to buy, I make more money if it crashes. So it'd be in my best interest to pray for a crash and tell everybody to wait for a crash, especially with my authority that I have in today's atmosphere,
Yeah.
and I could just run it up when it does crash and just have a waiting list of people waiting. No, I'm telling you what I think the truth is from a non-biased perspective.
Right.
Like, I'm only now this year pushing people to work with me because I'm like, well, if you're learning from me, why are you not working with me? You know how many people DM me me they bought a house because of my knowledge or because they took the blueprint? You see it. We together
that
outside.
sucks.
How many people come up to me, Tooks, like, yo, the blueprint, it helped me buy 3 houses.
Oh, did you work? Did you work?
I said, and then I always say that, right? I said, well, did you work with me and my team? Oh, no, man. I'll be like, womp, womp, womp. Like, wait a minute, hold on. Literally, Jordan, probably 1,000 people have told me this.
Yeah, that
No,
sucks.
seriously, you got to think we're in front of thousands of people on stages and stuff like that. And I'm one who goes to the crowd and I'm talking to the people, whatever the case may be. And I'm always getting this. And I'm like, wait a minute. I didn't close
the
this
hell?
many loans last year or the year before. Like, y'all not working with me? Oh, hell no. That got to change because I'm not non-for-profit. I don't do this to be a content creator.
Yeah.
I want loans too, man. Send them me.
Yeah.
I wonder if you wore a suit, if that would change.
Well,
Maybe if you stop cursing so much.
I didn't say that. I just said if you wore a suit, they probably think you're like,
Well,
you're in work mode, all the time.
on content wear suit?
Yeah, just content. I think that's
Nah,
probably why.
you see me on stage in a suit now.
No, but I'm saying for social media, people who are coming to you or for information, I feel like if they saw you in a suit more often, they probably think you're like working or like actually, it's just a mindset thing. Like if you see somebody with a suit, you're probably in the office.
Well,
probably
no,
doing
I
deals,
I will say this. It's something about working with people that look like you, that talk like you, that was powerful. Because you were at my closing table.
Right.
My lawyer was black. My realtor was black. I didn't expect
Yeah.
y'all to come through. Y'all like, who the, I'm like, I thought you was the intern, you know? Matt had like some MCM probably on. It is nice.
I didn't have an MCM on.
Whatever you had on.
Hold on.
Well, I don't know. I
didn't have
listen. Whatever he
MCM
had
on.
on, it was
Yeah.
nice to be surrounded by people
I
that.
was dripping responsibly.
It was nice to be around
No
people
disrespect to MCM.
that looked like me, guys. Sorry, I said the wrong name, Bray. I don't know this stuff, but it was nice to be working with people that talk like us, look like us. So yeah, for sure.
Look, at the end of the day, do what works for you, what works best for you. Nothing else matters. What works for me is not going to work for Tukes and Jordana or the audience. What works for Jordana is not going to work for MG, and that's okay. Different strokes for different folks. Everybody got to do them. I'm just here, and we are here to be able to provide information at the highest level, put it into layman's terms so that way you guys can understand and go out there and execute at the highest level, at the level you're at. And keep scaling it from there, if you choose to. You know how many people say, yo, I don't want to buy a multifamily. I just want to buy a house. Well, congratulations. I'm glad you know what you want in life.
Right.
Because not everybody's meant to
some
be a
people don't.
landlord.
Yeah.
It's hard work. And it's expensive. You got to fix things.
ASAP.
I ain't got time
ASAP.
for that. Ain't nobody got time for that.
That's what I'm saying. So, I'm not here to point you in either which way. I'm here to speak to the audience as a whole. And I tailor my communication accordingly depending on what subject we're talking about. If we're talking first-time home buyer strategies, I got House Hackonomics. If we're talking about you want to be a first-time investor, then I got the Real Estate Investors Manifesto, right? I got all of these different tools and options. The Blueprint Volume 1, Volume 2, I do webinars, I do YouTube. I'm trying to give everybody the options and the information from no matter what stage you are in. It's something resourceful for you. You can learn, you can understand it, and most importantly, you can go out there and execute on it, and then also teach or educate the people that's in your inner circle so that way now they can level up, because that's how we all win as a community if we're sharing the information and spreading the word accordingly. I feel like I've been on here for too long.
We had a great time. So
How
let's
long
go.
has this video been?
At least
Oh,
an hour.
that's an hour. It's an hour and a half.
That's not too bad.
That's
That's
not
not too bad. That's not good for a
too
live.
long.
All right. Who else? I see Jordana's in the comments.
Yeah, somebody said because of you they were able to buy lands and properties, but they didn't come to you because their credit wasn't too high.
So, why you didn't come to me? See, this is what I mean.
I mean,
But I'm happy you executed.
Yeah.
I love the fact that you executed. But this is basically what we were just saying. How many people use the information that I give them and they take it somewhere else? And that's the only reason why now I have to remind people over and over and over and over now, hey, I lend for a living. If you're learning from me, give me and my team the opportunity to work with you. I'm not saying you must work with us. Hell, interview us. Just like you would do any other lender. We're cool with that. Let us earn your business. That's it.
yeah, I think we have to do more business branding stuff for your page. rather than-
For what, social?
Yeah, nobody really sees that side anymore. I mean, it's starting to now because you're starting to wear suits more, but you're not really out there as much as you were in the beginning when we first started working.
Well, this is why I was trying to tell you, even what I've been saying, and even when we was talking offline, it's like, even being at Kiana's thing this weekend,
Yeah,
and being with the real estate community, the most powerful thing I got from all of that this week was like, damn, especially when I'm speaking to the people, like, yo, I got to get back into catering to my real estate professionals, like at scale, because that's my people. And they're on the front line of generational wealth along with me. And
Right.
the information I spoke about today on this live, they didn't even know. And these are licensed real estate professionals all over the country who work with many different lenders. And their lenders are not even educating them on this. So it gave me more, and shout out to Kiana because it inspired me on so many different levels. And she's actually inspired us on 2 different occasions this year so far, because we've been in Atlanta twice this year so far.
I gotta see my girl Kim. I gotta go
Right?
back to Atlanta.
Just from her office and then
Right.
now this, it just inspired me. Like, you know what? I gotta now influence more in the real estate professional space. I gotta put more content out there, more mentorship, more things out there geared towards my licensed community. Because if we're not on point, then how can we expect them to help this generation of home buyers and investors
Right.
if they don't have the proper tools and resources and knowledge to go out there and do it? Because these real estate companies and these real estate licenses, first of all, a license is not a license of how to get money. It's laws, right? So to get a license, you have to know the law. That's what
Right.
they teach you. And a lot of these companies, they don't train you on these things that we speak about.
Yeah.
So they may know the basics of the basics, but they don't know the stuff that I speak about and how I speak about it. And then this weekend really like the light bulb went on my head. Like, nah, I got to get back to this, because that was my before all of this. That's all I did.
Yeah.
I focused on my book of business and my referral partners, educating them at the highest level. I wasn't educating the consumer unless you was a client. I was selfish because I didn't want to pass it to anyone. Just because what happens now, they take your information and go work with Tom, Dick, and Harry. They go run the play with them,
Yeah.
and then it don't come back to you. But I am selfless to that point where it doesn't bother me. You know what I'm saying? But
Right.
7 years ago, oh, hell no, you wouldn't have had me doing this. Because they would be like, nah, I'm keeping this to myself for my clients
I'm
who
not
work
mad.
with me.
I'm not mad at that.
And that's
Yeah.
what I did my entire career, basically. And I focused on coaching and training my realtors to be the best that they could be. So that way, in turn, they'll send me their clients, right? So now I have to get back to that. So that way, people, and you're right, we need to put out that content too.
Yeah.
And maybe I'm having a webinar next week, and I was going to make it for the consumer. My webinar is going to be for the real estate professionals next week. I was going to have it for the consumers, but I'm making it for the real estate professionals. And then what we're going to do is we're going to get back to those lunch and learns that we was doing last year,
Yeah.
especially here locally. We're going to get back to doing those lunch and learns. We'll probably do one in February. We'll figure out where we're going to do it at in the next week or so, and we'll do it probably end of February, a lunch and learn in person, and we'll do a lunch and learn tour.
I mean, you were supposed to at around that time, but we had stopped.
Yeah, because I be getting busy, and I just be like, nah, fuck this shit. You know what I'm saying? Like, I be like, let me go run the
Yeah.
plays over here, because I like the way the plays look.
Yeah.
But I can't be like, I gotta keep it to my real estate professionals, man, because the more and more I speak to the real estate professional community, I'm like, dang, man, y'all don't know this?
Yeah.
Who's your lender, man? No one teaching y'all this? So, it gotta be me. I'm nominating me.
I love it.
Who's that baby daddy? I am. Remember you saw that movie? What's that movie with Eddie Murphy?
Martin,
Life.
Yeah.
He's like, who that baby poppy?
Who the pappy?
Who that poppy? I'm that baby poppy. Well,
I just saw that on my Netflix. I guess it's trending as of lately.
that's me. I'm
Yeah,
volunteering
I'm the
myself. I'm going to be the one who's going to teach the real estate community and also the consumers as well.
All right now.
I'm going to teach y'all something. Professor MG is back, baby. Tooks, I'm putting on suits. But after I lose all this weight, I'm going to get a whole new wardrobe, donate all the Fat Boy suits that I'm buying right now. I'm going to donate all the Fat Boy stuff. And then when I get to that 200 pounds, Tooks, and I'm going to use your money to buy.
Come on,
I'm going to
man.
use your money to buy
I
two
knew it
nice
was
custom
coming
suits.
every day.
I'm going to buy 2 nice custom suits for Skinny MG with your money.
Oh my gosh. How much was you weighed in today?
No, I didn't weigh in today.
Why not?
I don't know. I forgot.
Do you know how much you weigh?
I'm probably like 260 something.
Okay, so you
I
got
feel-
60 pounds left.
Yeah, I feel like 265-ish right now.
Okay. No, you look slim. You look
Say
a
it
little
again.
slimmer.
Say it again.
You look slim.
Okay, bro.
Yeah, that's good. That's great. This is good news.
Huh.
This is good news.
Huh.
This is good.
Let me sip my tea. All right, now.
Let's go.
We got to get out of here.
So, for those who are watching, we will be posting this in the live section, and we will also be posting as pre-recorded clips as well. So, if you guys are looking for a specific part, you guys can find it on the pre-recorded section or video section of our channel.
All right, and what I want you to do is put the license states. I'm gonna text you all of that. The license states in the description too, because people keep asking the same states that I keep saying. Yes, I'm in PA. I'm in the whole East Coast. Okay, but we're gonna put all the license states that we can help you in the description. The links to apply, to book a consultation. If you're a realtor, if you want to set up if you want us to be your preferred lender or talk about it, we'll set up the partnership calls that way. mgbookstore.com to pick up the books. I'm going to have a webinar next week dedicated to the real estate professionals. We're going to get back to that this year at a vengeance. And yeah, make sure you like, share, subscribe, all that good stuff. Hit the bell for notifications. And I guess I'm out of here.
Yeah.
Yeah, Georgia too. Yes, we're in Georgia. I love Georgia.
I know we in Georgia.
You got anything else to say on this?
No, I'm having a really good time with you. I like this. This is fun.
It's podcasting.
It's definitely like a podcast.
And we got these damn mics in our face. I love it.
Yeah, Tukes
I've
got
only
us-
been saying this for about like 2 months now, but nobody listens.
2 months
to
of
me.
what?
Tukes
I've been
increased
saying,
the
yo,
budget.
we should do a show. We should have it where
This
it's
is a show.
A conversation, though. You know, like how it is today. This
Well,
is a perfect
upload the
example.
audio to MG the Mortgage Guy Show on all the podcasts today so people can go and listen to it. Download MG the Mortgage Guy Show on any way you listen to podcasts, and hopefully Tukes will put these lives up there so that way you can go and listen to it as well.
Working on it.
You see this bullshit?
right.
We're working on that.
Yeah.
There's nothing to work on.
There's a lot
Just
of
do
moving
it.
parts in
Just do it
behind the
today.
scenes.
Thank you, Matt.
Yeah,
Thank you, Tukes.
All right.
Thank you, Matt.
Show's over now.
Thank you,
Yes.
Matt. Show's over. Yes.
Bye, y'all.
You got to put it on her so she can say bye.
I said bye. Yeah, I have not.
They didn't see you.
Oh, well,
Now it's
bye.
on you.
Hi. Producer extraordinaire.
Producer extraordinaire.
I need a tagline.
Producer extraordinaire.
No, that's like, that's Kiana.
Oh, the broker extraordinaire.
And you have, the mortgage guy. We got to figure out something for me, for sure.
All right, so-
I got to get a book. I got to get a course. I got to get like a tagline, all this stuff.
What's
Yeah.
what's Jordana's tagline, y'all?
I don't even know. They have to help me out with it for sure.
We know Matt's is this is Matt Garland.
Yeah, I'm going to come up with something.
NMLS number 58700, better known as MG the Mortgage Guy.
Yeah, I gotta
Yes.
come up with something. But right now it's just Jordana Hemingway on all social media platforms. But I'm really on TikTok. I only check the rants and gems on social media, like on IG.
Super
But, like-
producer. That's what he
Super
calls you.
producer.
Super producer? Okay.
Yeah, super
Okay.
producer.
Okay. Oh. all right.
Super producer.
Okay.
Jordana.
Let me see the
Now
cat.
Tukes needs a damn
Well, no, Tukes is
tagline.
production.
I don't
He got
need-
his
I
thing.
don't really need a tagline. I think it's just
Well, he's Tukes Productions.
Tukes. That's it.
They take pictures with Tukes now. You
I
should have
know.
saw the last
I
event we
know.
was at.
Oh, and this guy.
They're
why
taking
you-
mad pictures. Watch when we go to the event
No.
next week in Baltimore.
It was one person that took a photo. This guy said it's like
It was like
50.
5 of them.
It was not 5. It never is. This guy making up
They be like,
stories.
oh, that's Tukes.
Tukes,
That's
Tukes.
Tukes.
No, they don't be saying that.
I've
I be
seen it
quiet.
before.
I be quiet as hell. I don't really talk like that. I just be filming. That's it.
All right, y'all. We need more likes, man. More likes. Like the video. And we are out of here. Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. Peace.